Coming up on Market to Market, a presidential declaration receives cheers and a heavy dose of caution. Ranchers in the High Plains push back over water and grazing rights.
Majority of their beans from Brazil.
And market analysis with Tomm Pfitzenmaier next.
We've got a lot of time.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, October 12 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. The prices paid in the store and online fell slightly last month as the Federal Reserve boosted interest rates to keep inflation in check. The Consumer Price Index, a measure of inflation, rose 0.1% in September. Without the swings brought on by food and energy, core CPI rose 0.2%. The energy sector has been on the move as well. Even though crude and gasoline prices fell back slightly last month, both have been on the rise for the past year. Ethanol has been acknowledged as a factor in moderating high fuel prices and helping stretch the gasoline supply. This week, the president made good on a campaign promise to continue supporting the predominantly corn-based fuel. Peter Tubbs reports.
President Donald Trump announced a long-awaited move to allow the year-round sale of E15 gasoline blends at a campaign-style rally in Council Bluffs, Iowa this week.
Today, we are unleashing the power of E15 to fuel our country all year long, not 8 months, all year long.
The White House officially asked the EPA to grant a waiver to allow the sale of E15 blended gasoline in the summer months nationwide. The rulemaking process is expected to be cleared in time for the 2019 summer driving season. The math of higher ethanol usage is positive for ethanol refiners and the farmers who grow the corn used in ethanol production.
How much, how soon? We really don't know. Ultimately, it could be 6 to 7 billion gallons, which would equate to, close to 2 billion bushels of corn. But that's not going to happen between now and Christmas.
7 billion additional gallons would be a 50% increase in U.S. ethanol production, up from the current 14 billion gallons produced annually. But the process of attracting drivers towards E15 is full of unknowns. Around 1% of gasoline retailers currently sell E15. Retailers have 2 tracks to adding E15 at their pumps. Add blender pumps to create the proper mix, or replace a slower-selling non-ethanol fuel from their gasoline menu. The ethanol industry is optimistic consumers will embrace E15 when they see the price discount at the pump.
People don't want to think about their fuel. They want to just go up and hit the button they're used to. And so what we found is that some retailers they didn't make a big deal over it.
But the process of granting the new waiver is expected to be slow. Those looking for a quick fix to the corn market may be disappointed.
And we know that there's legal uncertainties because the refining industry has loudly announced that they're going to litigate that decision. And so who knows? There's just a lot of uncertainties about when and whether the E15 year-round waiver will stick. Reasonable expectation is at least for the next year or two, you won't see significant investment in E15 infrastructure until these uncertainties are cleared up.
Half of the gasoline retailers in the U.S. are owned by an oil company or refiner, which may slow the rollout of E15 pumps. Several states ban the sale of ethanol blends above E10, including California and New York, keeping a significant percentage of drivers out of the E15 market. Despite the hurdles, ethanol's promoters are optimistic about E15's long-term sales potential.
It's cheaper and it's higher octane, which means it's better for your engine.
For Market to Market, I'm Peter Tubbs.
The old school fundamentals of land and water remain at the center of cattle production in the West. There are still fights over resources in this rugged way of life, but how the battle is won depends on the combatants. Josh Bittner has more in our cover story.
Like I said, right here in this very spot, I got pictures of many, many elk in here. And they're saying, well, no, the elk don't do the damage, it's the cows. I know that's not true.
Spike Goss ranches on a federal grazing allotment in New Mexico's Sacramento Mountains, where the Sky Island's natural resources have provided generations a livelihood from the land. His chain of title stretches back to the late 1800s, but Goss fears his way of life is under attack.
My rights come long before New Mexico became a state, long before there was a U.S. Forest Service. But yet they won't recognize that.
More than 50 years ago, the land was federally designated part of the Sacramento Ranger District. The district covers about half the area of the over 1 million acre non-contiguous Lincoln National Forest.
Most allotment owners around here don't understand what's going on, I don't believe. After we're gone, they're coming next.
Goss believes a tangled web of old laws and newer regulations have been misinterpreted through policy over time, leaving split estate public land use fundamentally altered through sue and settle litigation.
They want our water. If they can get the water, they can control us. They have us. I mean, we're finished without water.
Goss's Sacramento Grazing Association pushed back against the federal government for decades before suing the U.S. Forest Service in 2004. But not until last year did a judge uphold Goss's assertion that fences erected by the Forest Service to safeguard critical riparian habitat fit the Fifth Amendment's definition of illegal takings by preempting stream access for his thirsty cattle. Goss says the federal agency has largely disregarded the court decision, but as the post-trial damages phase continues, USDA Forest Service officials told Market to Market they are unable to comment on the ruling.
They just started this year, putting these fences in the exclosures, these small fences in the exclosures.
So every drop is appreciated.
Beth Humphrey, a retired district ranger, says the agency is governed by a multiple-use policy that requires weighing input from several stakeholders, along with other tasks like fire prevention and wildlife management.
In general, if we fence out a piece of ground, it's to protect for threatened and endangered species, or in some cases, we will fence off an area to protect erosive soils.
Over a century ago, the U.S. government incentivized Western expansion by allowing those who arrived first the right to own water and mineral rights, known today as prior appropriation. States east of the 100th meridian, flush with rain and snow, generally received riparian water rights.
Forest Service says we're a permittee. We're not permittees. We're allotment owners. We own our allotments. We bought it, and then we pay a grazing fee on top of that. And yes, in 1978, the U.S. Supreme Court ruled that we own the water rights.
As Goss's case was being heard, the New Mexico meadow jumping mouse was granted endangered species protection, creating further friction between ranchers and rangers.
This is wasting our time. It's wasting your time. If you want this damn water, pay for it.
I don't want the water.
Humphrey says the whole situation brought to mind recent high-profile standoffs over similar issues in Nevada and Oregon.
There were some outside interests who were trying to elevate the contention. We were concerned when that happened. We didn't know what to expect from some of the people that have that value system and that mindset about the federal government. There is an element of that here.
But Spike's wife, Kelly Goss, refutes those sentiments.
No, we will not resort to violence. This is not worth someone's life. This is our heritage, our way of life, our livelihood, what we want to pass down to our kids and our grandkids.
Critics charge the Forest Service has shifted to a more environmentally based vision, and mismanagement is evidenced by the increased number and severity of western wildfires.
I think we need to be honest and say that the land here has been overgrazed, and we need to really figure out a way to bring it back to its glory as what it used to be.
Water rights holders across the Land of Enchantment say environmental activists have deftly employed legal tools to further their causes, citing the Equal Access to Justice Act and other provisions that allow nonprofits to sue the federal government and recoup legal fees at taxpayer expense, if they win. But Wild Earth Guardian's executive director John Horning, instrumental in winning legal concessions for the mouse, says organizations like his take huge financial risks. Horning argues the margin of error for endangered species is too small for compromise and calls grazing an economically marginal activity, adding that cattle congregate around waterways, strip away vegetation, and send shock waves through ecosystems.
They just continue to take and take and take.
Some allotment owners believe career bureaucrats have used environmentalism to swing policy in their favor. The Gosses say they've endured pressure from the federal government across multiple administrations, but admit President Trump's campaign calls to drain the swamp resonated with them.
We hope. We haven't seen it yet, but we hope soon. We'd like for somebody back there to come out here and take a good hard look at this and look at our issues and listen to some stuff that's been going on and look at some of our documentation and mostly follow the law. I don't believe they're following the law at all.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
Wet weather, a government report, and a potential meetup between leaders of the world's most powerful economies made for mixed commodity markets. For the week, December wheat lost 4 cents and the nearby corn contract gained 6 cents. November soybeans were down 15 cents mid-session, but managed to fight off a bearish WASD to finish flat. News that Presidents Trump and Xi would meet next month was a contributing factor as well. The December soybean meal contract fell $2.70 per ton. Hurricane Michael swept across cotton country, sending the December contract higher by $2.27 per hundredweight. Over in the dairy parlor, November Class 3 milk futures fell 28 cents. The livestock market took it on the chin as the December cattle contract shed $1.97. November feeders dropped $3.60, and the December lean hog contract moved $2.55 lower. In the currency markets, the U.S. dollar index declined 40 ticks. Crude oil retracted $3 per barrel. COMEX gold added $16.40 per ounce. And the Goldman Sachs Commodity Index plunged over 13 points to finish at 480.25. Joining us now to offer insight on these and other trends is one of our regular market analysts, Tomm Pfitzenmaier. Tom, welcome back.
Yeah, thanks, Delaney.
Tom, we had the WASD report here, and I want to start talking about WASD when we look at the wheat markets. They raised U.S. ending stocks and cut global ending stocks. Where did they cut those from the balance sheet?
From the U.S. or the
From global.
Well, I think you've had several countries. You know, the European crops struggled. There's really tons of problems over in Australia. They've been hit pretty hard. South America's even in Argentina. You know, the problems they had in their corn growing area last fall has kind of carried on into their wheat crop. So I think those are the main trouble areas. That's been the problem with the wheat market. You've got all those problems over there. You've got a somewhat decent crop here. And the other puzzling thing is that all those problems they've had with wheat overseas hasn't translated all that well to U.S. exports. I mean, we had another disappointing export number Friday morning. So that's kind of what has people scratching their head. And a lot of people look at the overseas problem and say, wow, wheat should be moving along pretty well. And every time it starts to rally up, you run into this export problem and down it goes again. So I suspect wheat's going to be in a trading range because of that. Why don't you think the USDA has raised U.S. exports or lowered exports from Russia and Australia and some of these other countries with problems? Well, the obvious answer is I don't know. But I guess they must feel there's going to be enough of it moved to satisfy whatever needs the world has and wants to buy from them. That's the only explanation I can think of. I want to go back to something you said just a minute ago, and you said that we're going to be moving in a range here. Tom, can you give me a
number range for that?
Yeah, I think December wheat is kind of one people are watching right now is probably going to be in that 510 to 530 range and bounce around in there and maybe slip above it a little occasionally and a little below it, but that's kind of going to be the rough range for a while.
If we do see exports pick up from the U.S., how much more support could we see, or how high could we break out of that range?
I don't think you're going to break out much. I mean, maybe you can overdo it and go into 545, but I don't see it going much above that range.
Okay. Tom, let's talk about the report for corn. Is USDA's yields going to go up or down from here?
On corn, I guess I wouldn't be surprised to see it go down a little more. You know, you talk to people around the country and they really talk highly of their bean yields, but you ask them about corn and it's like, yeah, it's okay, but not great. And I think there's some concern that there's been some field loss because of all this extra rain we've had in a lot of areas around. So I guess I wouldn't be surprised to see it slip back just a little bit.
Do you have an idea in mind of how much they could pull that yield down?
Maybe a bushel and a half. I think that's part of what was behind the rally we've had in corn recently. I think the trader didn't quite believe the USDA yield number, and they're factoring in a little higher, or a little lower number, excuse me.
Did you see this report as a whole bullish or bearish for the corn market?
It was certainly supportive. I think you could see corn work up another 10 to 15 cents. You know, they did bump exports a little bit. Now, weekly exports this week were really quite disappointing. We've got really good export sales are high relative to a year ago, but a year ago they weren't very good. So you're not comparing. That comparison I'm not sure is valid. In terms of what we need on a weekly basis to meet the USDA's projections, we're lagging behind. So I guess we're going to need to see that pick up. We've got the cheapest feed grain in the world in U.S. corn, so it should translate to good exports. I guess we'll have to see.
What about when you look at acreage numbers, Tom? Are we thinking that this lower corn yield this year will impact acres that producers might transition into corn for next year?
Well, I think with the price of and the quantity of beans we've got laying around, I think you're going to see switching next year away from beans and then into corn, wheat, and cotton, all three, I suspect. How much of that's going to be corn acres? 4 or 5 million, I think certainly a possibility.
I think the other question that we got a lot of social media questions this week from, and you can send those in on Facebook and Twitter, folks, is weather. That's the big question that a lot of producers wanted answered this week. So we're going to pull a question here from Brock in Baxter, Iowa. He said both corn and bean fields are sprouting, molding, and full of disease. The markets say store the grain. However, with the condition of the grain, it creates the concern with long-term storage. Do we ship it? Do we store it?
Well, if you've got a crop that's going out of condition, you got to sell it. I mean, you got to get it moved. Who would want to put that in their bin? So you know, you're going to get, that's maybe a basis problem, because if there's very much of that and it gets moved, that's going to keep price. You know, one of the arguments has been, well, farmers aren't going to sell much corn, and that's going to reduce the pipeline and help basis levels. And I guess I'm not sure that that's going to be the case, partially because of what he talked about, and partially I just think there's going to be enough corn get moved. You hear a lot of people say they're going to move corn and sell beans, so that's going to keep the pipeline going. I don't know, but if you've got corn that's going out of condition, you got to move it.
Yeah, unfortunately, you have to move it.
Yeah.
What about when you look at the WASD report? They lowered soy harvested acres. Was it because of weather, or was there some other factor there, Tom?
You know, that's an interesting question. We talked about it quite a bit in our office this week. Those WASD numbers were taken kind of before the bad news and the weather came. So there may be something, and almost half of that came out of Arkansas. So I'm not exactly sure what was going on in Arkansas. I mean, if you take Arkansas out, that you know, a few acres here, a few acres there, that's not a big surprise. What happened in Arkansas, I guess I'm not sure, but that certainly helped offset the little bump in yield we had in that report, for sure.
So if you are factoring in here that they took this report before a lot of the weather issues happened, do you expect them to further reduce harvested acres?
I think that's a possibility. For sure. I mean, you don't have to look at the news too hard to see a lot of flooded beans, bean areas that they're not going to be able to get into for quite a while. And when they do, there's probably not going to be that much there. So I guess that wouldn't be a surprise at all. We may have another situation where they bump yield a little bit again. The interesting thing about the report was the pod counts were up.
Right.
But the pod weights were down. Now, if things kind of straighten out and they, I mean, pod counts are pod counts. That's not going to change. But if you bump the weight of those pods a little bit, that can add some yield. Will that be offset by, like what you were saying, by abandoned acres?
I guess that's a wait and see game at that point then?
It kind of is. I suspect that we pretty well know what the crop size is. We might adjust it a little bit. I don't really see that changing a whole lot.
Tom, the last thing I wanted to ask about here in the soybean market was exports, because you mentioned in your newsletter this week that USDA didn't lower export estimates, but do you expect them to continue pace with that?
No, they're going to have to lower them. I mean, if you look at the weekly exports, we had cancellations again by China and unknown destination, a little tiny bit from Japan even. So we're not keeping pace with the projected export sales.
I guess the better question here might be why. Why is this still happening?
Well, the Chinese trade situation, for one thing, that most of the demand's going to South America, or maybe a few beans going through Canada. The bigger issue in my mind is you got a carry out of 900, darn near 900 million bushels. One of the things they rallied the bean market Thursday because the bean carryout came out at 885 instead of 900. Really? For most of my life, when you got to a 350 million bushel carryout, it was bearish as all get out in beans. We're talking about almost a 900 million bushel carryout, and people are running around like that's friendly. It's not friendly. That's too many beans. We've made our largest customer that we've had mad. So even if we reconcile things with them, that's not going to come back like it had. South America's on track for planting a big crop. If you get a rally on these beans, you better use it to make some bean sales. And this, I'm going to store my beans for a rally. What rally? Why are we going to get a rally? Sell some of them on a rally like this.
Definitely sell because of today and yesterday's
Especially
rally.
There's a big carryout out to July. You can sell out to July and capture a pretty good carry, and it's not great, but it's not terrible.
Tom, I'm going to save cotton for Market Plus and some more soybean discussion. So let's talk about the live cattle markets. December cattle broke support levels. Does this indicate that we're headed down from here? It
indicates that the market's soft for sure. You rallied those December cattle up against 120, and they just kind of ran out of gas. Now, export sales are pretty good, so that's supportive. The thing that's bothered me about the cattle market for a while now is you've got the distant months at a premium to the front. And anytime that happens, there's a tendency for producers to hold them, put on weight, say, well, I can hold them for another month. It will be worth more. I'll have a little more weight to sell. And that's always the kiss of death in the cattle market. So, I don't see it totally falling apart, but I think you could have some more pullback. And if you got in that 119.50 plus range, I think you probably need to make sales.
Is that premium out in the future months why we saw cattle weights increase week over week this past week?
I think so. I think that's exactly why. And you've got cheap corn. I mean, you not only got a premium for holding them, but you're feeding them pretty cheap corn, DDGs, whatever it is. So, I mean, I understand why they're doing it. It's just may eventually be a problem.
Tom, will these lower cattle prices have any effect on the hog markets?
I don't know which is pulling which. We had a 53% rally in December, hogs off the lows. I mean, that's a pretty fancy rally in the hog market. Now, some of that has to do with African swine problems, and I get that all the time. How bad is it? Well, we don't know. I mean, a lot of that's in China.
It's
reporting's
censored,
not that great. We kind of have to get, if that keeps getting, and look at that hog market. They've got June hogs up at $81 or somewhere up around in there. Somebody's already anticipating that's going to be a problem that's going to lift the hog market. Whether it is or not, I guess we'll see. If it isn't, then $81 on June hog is a heck of a sale.
It absolutely is. Tom, Thank you so much.
All right. Thanks, Laney.
That wraps up the broadcast portion of Market to Market, but we will keep this conversation going on Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. Check out our Flipboard magazine called Market to Market Reading Material. Our producers drop several stories every day into one convenient location for news impacting rural America. Join us again next week when we'll explore how high school students manage the local grocery store. So until then, thanks for watching. I'm Delaney Howell. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.